All right, let's get started. Thank you again for joining us today. We'll turn down the background music here momentarily. But just to get going, so we wanted to bring folks together to talk a little bit about how we built the first AI insurance. And so the question I always get when we talk about this with clients and partners is, how the heck did you all do this? And so I know our client base tends to be very intellectually curious, and so I thought you all might enjoy a little bit of a peek behind the curtain. So before I introduce you to my fellow co-hosts here today, wanted to tell you just a little bit about who we are as Vouch. And so if we could go to the next slide. Vouch is an insurance company for the technology industry. We launched our first products a little over 4 years ago. Today, we serve over 4,000 companies, over 550 of which are AI companies, and increasingly serving larger and larger companies as well. And so incredibly proud to serve all of the companies that you see here today. And part of what makes us unique is not only are we a broker that can give you access to global coverage over 80 plus markets, but we are an insurance company first and foremost. And so we really pride ourselves on being able to develop the latest coverage that our companies are continuing to build and move the world forward by building new products that create more and more risk. And so we'll today kind of pull back the curtain a little bit and show you how that is done behind the scenes, where through working directly with these companies is one of the things that's different about Vouch versus other insurance companies that typically work through brokers. It's those relationships, those insights, and the capabilities we've built that have allowed us to launch new things like AI coverage before the rest of the market. So with that, I'll tell you though, I am not the one often making the magic happen. It is really the folks here and the large team of 200 plus Vouch employees that make it happen every day. And so Evan, our director of product, Suzanne, our head of claims, and Sophie, our director of AI, are going to walk you through a little bit of how it's done. So Evan, if you wouldn't mind starting by introducing yourself.
Yeah, hi there. Evan Roman, Director of Product, leading our insurance innovation team, second employee at Vouch, and former SVB Capital investor.
Hi, everyone. I'm Suzanne Robinson, the head of claims at Vouch. I'm a longtime attorney and insurance specialist. I spent a long time at Travelers Insurance managing high exposure claims, and then at Ameriprise Financial as general counsel of their insurance companies, and most recently at some data and technology companies as the general counsel. So super fun for me to be at Vouch, where I can combine all of that experience and help innovate.
Well, and I'm Sophie. I'm a corporate attorney and an insurance advisor, and I lead enterprise and AI at Vouch. I've spent the last 10 years in tech and regulation. So I think I'm going to take over the mic now because I want to just briefly set the scene. So first of all, the risks that get the most media attention in relation to AI are the truly existential risks. So its impact on job displacement, it getting into the hands of criminals or our international adversaries, or the big one, which is AGI. Can it and will it become sentient? But what general counsels and product leaders are most worried about are the run-of-the-mill typical business considerations, like customer lawsuits, guidelines for ethical data use, compliance with privacy laws, product liability, systematic bias, transparency disclosures, and of course, cybersecurity. We'll go to the next slide. So as for the pipeline of AI litigation, most of the lawyers that I know are actually spending most of their time right now just working out how their clients' use of AI fits in with existing regulations without even trying to think about what might be coming down the pipe. And that's because we already have an enormous number of laws that all these companies are used to having to comply with. Things like privacy, IP, discrimination, consumer protection. And then in addition to that, the US has something like 50 independent regulatory bodies that govern a whole bunch of different activities that our clients engage in. So we do have some new regulations. The main one, though, that's had all the attention is the EU AI Act. And the most helpful thing it's done is actually apply risk classification on AI use cases. And the reason it's so followed in the US is, for one, it has pretty extraterritorial application. So if your product will be used at all in relation to the EU, then it will apply. But also, it's pretty likely that the US will actually follow a similar structure for its AI regulations, which are anticipated this year. We'll go to the next slide. So I wanted to show you this framework. It's just a really good way of thinking about risk management, which is just What's the severity and what's the frequency? We'll go to the next slide. So what we're saying here is that for any risks that are high frequency, you just need to mitigate them or avoid them. But next slide. But for the risks that don't happen that often, but they're severe when they do, you should just transfer those risks to an insurer. Go next slide. So what have we been hearing from our clients? What are the big issues for AI companies today? Number one is go to market. So they've got their customers, so in many cases, big corporates that are looking to them for proof and assurance that they actually have best practices in the same way that they would ordinarily do for, say, SOC compliance. The next thing is that the damages and fees are uncertain because court cases will take years to play out. We've seen that in all aspects of insurance over the last decade, especially cybersecurity. The third is, even though a lot of the LLMs and the large model providers do provide some indemnities, they have really complex exclusions. And then finally, this kind of goes back to the power issue, but very few companies have the negotiating power with those AI vendors to actually protect themselves through normal contracts. And the companies that do have that power are not startups. So the insurance gap related to this is, number one, the standard tech E&O policies don't offer clear coverage for AI errors. And obviously that leaves our clients vulnerable to coverage denials, but also just these drawn out claims headaches. So I would now like to hand over to Evan to talk more about our product.
Thanks, Sophie. So we took a pretty traditional product management approach to this and really listened to our clients' pain points and built the insurance with those problems in mind. So the core promise is that AI insurance will cover the cost of damages and lawsuits as a result of your AI product, really providing you with that financial backstop so your team can move faster with confidence. So to really get deeper into what it covers on the right-hand side, we made a tailored E&O product, errors and omissions, that affirmatively covers financial losses when there's an error caused by your AI products. There's no more question about who is liable for, and really who the financial backstop is. That's what this insurance is designed for. Going to the next one, AI models are unfortunately susceptible to discriminatory or biased outcomes, either as a function of the model itself or the data set that the model is using. So we've carved out a specific sublimit to cover claims alleging algorithmic bias and discrimination as a result of the AI models. As Sophie mentioned a couple slides ago, the regulatory landscape is ever changing. So we wanted to design a specific sublimit, this regulatory investigations one, that can really future-proof your coverages as new regulation is defined in the case of regulatory investigations or violations that you may incur as the space evolves. And then really the last one here, we've heard a lot of concerns from clients over how either the learnings and the insights from their data could unintentionally be leaked, their IP to another client that's using the AI model or the platform, or how generative AI can copyright or plagiarize. So we really designed a specific sublimit to address these concerns. So going to the next slide, just like you, it's in our DNA to push the boundaries of what's possible. It takes a traditional insurance company roughly 2 years to launch a new insurance product, and they really only change their existing insurance products on average one to two times per year and keep them fresh. And so the chart that you see here is the cost of our insurance product launches over time, from left to right, starting with Vouch 1.0, the first product launch we ever had, to Web 3, and AI is not on here, just got the numbers like this morning. But we've really made investments in our platform to enable us to keep up with the pace of innovation of our clients that we serve. And so looking at the left, you see here like roughly over $1 million to generate or to go build the first Vouch 1.0 and a lot of people hours that went into it, and the cost of that dramatically declining. So for AI, we spent roughly like $75K and really like 4 people months total. And so dramatic improvement from even our latest coverage innovation, which was Web 3. So, as the space evolves, our promise is really to keep up with the pace of change and offer you coverage and guidance for these emerging risks. And so with that, I'll hand it over to Suzanne to walk through some claims examples for the AI coverages that we built.
Yeah, thanks, Evan. We thought it would be helpful just to kind of get minds working around what are the real life examples, or what are things that we anticipate with claims coming out of the space. And so got a couple of E&O examples here. One is the idea that there's a software product that customers are going to use. It's got some AI algorithms in it to help better target their marketing campaigns. So an example that I just made up in my head is we've got a financial services company that is looking to target high net worth individuals for a new loaning program. And the product has an error in the coding and actually ends up targeting college students, for example. So that could create a lot of headaches for the financial services firm because once applications are made for credit, then there's a lot of regulatory mess that comes along with trying to work through those applications. And so that could be an E&O scenario that could come out of a marketing campaign. We can go to the next one. This one in example involves the use of an AI chatbot, maybe even in claims administration, where because of an error in the programming, the chatbot is calculating refunds and using the wrong amounts or the wrong data, and has learned over time to calculate those, and the errors just compound in ways that create financial loss for the company. We can go forward. Yeah. So here's one that I think we could all imagine, with AI being used to help create a curriculum for an education type startup. And a great curriculum is created and presented to the customer, but a lawsuit comes in from a third party saying, hey, you used copyrighted information for creation of this curriculum, causing an IP infringement type situation. And then the final one here is an AI tool is used for evaluating IT performance, maybe in evaluating the security in place at a company. And an error results in a great report, all clear, all free, but doesn't identify a serious security vulnerability, which creates a situation where the company could be hacked and suffer serious losses. So just thought that would be helpful in terms of trying to make this real, in terms of how our coverage is going to assist companies like yours as we move forward. And I'll toss this back to Travis.
All right, so that's most of our regularly scheduled program. If you have questions, drop them in the Q&A session. We'll do our best to get to everybody's questions. But just to kind of wrap things up, I think first and foremost, it starts with that sort of network of both companies and experts to stay on top of these trends. And so it's a lot of looking at the claims data, talking to lawyers, experts in the space, but most importantly, talking to our customers. Thing number two would be that dedicated team and platform to then, rapidly develop and iterate on these coverages that Evan is responsible for. And then ultimately the platform and team of experts to bring that to bear with our clients every single day with Sophie and the rest of our sales team. And so with that, I'd love to open it up to questions. And looks like we've got at least one here to start. So the first question, naturally, this is the first question on most folks' minds, is how do you price this? And so I'll talk a little bit about just generally, how do you think about pricing new risk? And then specifically, what are the factors we look at for AI specifically? And so in general, there's a sort of heuristic in the industry that about 30% of business risk is insurable. And that starts with the idea that, insurance is generally the ability to get enough data to have a high conviction view as to the probability and the likelihood and severity of a given outcome, and then being able to insure that at a price that is bearable to the market, that it makes sense financially for folks companies to pay a premium to ultimately transfer this risk, as Sophie had talked about earlier. And so, obviously AI is a dynamic we've been monitoring for several years now, as we watched our clients increasingly go from, we mentioned we have over 550 today. I remember watching in our new business funnel, it went from about 10% of companies to 40% to now over 70% of companies that we see in new business every day have some form of AI risk. And so you start by looking at what is the shape of that risk, and then you look at what is the scale of that risk. And so by shape, I mean, are you developing novel large language models? Are you leveraging others' tools? Where within your business and your technology stack does AI show up? And so that's one dimension. The other dimension is then the size. So what's the scale you're operating at? Revenue, headcount, some typical sort of exposure bases that folks look at. And then the third dimension is how much risk are you looking to transfer? And so is that a $50,000 limit, $100,000 limit, $1 million limit? And so you take those factors, and one, anytime you're insuring something new, you have to be incredibly selective about the companies that you're going to work with. And so we do have human underwriters in the loop that are reviewing each new AI coverage as it comes out. And just like the rest of the coverage we offer, we'll continue to automate that over time as we learn more and build more conviction. But I think the thing to keep in mind is that it takes most insurance companies at least 3 years to react to a new dynamic like this, partly because they need to see claims come in, and partly because they're not able to interact as directly with clients in the way that we do. And so, part of how we solve for that is, again, you take a wide band of sort of certainty. Evan, I'm sure, has much smarter ways to talk about this than I do. And then you hone that in over time as you learn more and more. So for us, we hope that our both our pricing and our coverage continues to evolve and get more precise as the industry evolves. But we're really proud to be able to take what we've learned so far and come out with a coverage that responds to the risks that companies actually need protection against day to day. So, Evan, curious if you have anything you'd add to that.
I think you did a great job. I'd say the only thing is thinking about pricing. It all comes down to like relativity, right? Which is like, is this relatively more risky than another thing? And that's how you could also kind of make a little bit more precision in terms of pricing. So someone that is using AI for a financial product that's going to make financial decisions on behalf of someone is definitely going to be maybe more risky than something that is AI that is maybe assisting someone else in making a decision. Just depends on what the use case is. That also goes a little bit into the pricing. So and consideration of the underwriting. So
yeah. So here's another one that I think kind of related follow-up to that. How do you expect your coverage will change as litigation plays out? So, Evan, maybe you want to take the first crack at that. I'm sure others might have thoughts as well.
Yeah, so we actually talked about the sublimit particularly, but as it relates to the regulatory landscape, our coverage is designed to be future-proof. As that new legislation comes out, we understand that the space is evolving, and we really wanted to build this coverage with that in mind. So that's more of the regulatory side, but on the litigation side, as that plays out, it's possible that coverage, our underwriting, and our pricing may change as we learn more, and in many ways for the better. We want to make sure Vouch is here for you in the long term, and that can manifest in a couple ways. If we start to see a little bit more losses come in, and maybe it's a little bit more expensive, but for everyone, that's one way it can manifest. But for the positive. This can manifest in expanded coverage. If we start to see new patterns in litigation, in claims trends, or declinations that are happening, claims denials that are happening in the market, that's new innovation opportunities for us to go grant more coverage in many ways. And so I'd say, in fact, Vouch is looking for ways to cover you. And just, how do we approach this as new stuff comes up? As Travis mentioned, we're selective. We're measured in the risk that we take, and we'll dial it up as we learn more about the industry.
Yep, well put. Related question that comes in: what resources can folks use to stay up to date? Like, what are the things that we're monitoring to stay on top of that? So I'll start. It definitely starts with just being active in the industry. We're going to continue to host not just events like this, but private, roundtables and more public forums. It's oftentimes, as innovative as the technology is, it's important to really be in touch with the people that are building it day to day. So I'd say that's thing number one. But actually, I think, I'll turn it over to Sophie. You probably have better thoughts on this from a regulatory and policy perspective. How do you keep your finger on the pulse?
Yeah, it depends how deep people want to go. So for anything relating to, at a high level, broad AI regulation legislation, you are not going to miss it. If Congress adopts a complex AI regulatory scheme, you will see it. Similarly with EU AI Act, it's had so much coverage. And if you're a founder or even a CFO, I think that kind of standard news will be probably enough for you. And you'll know in relation to your company when you probably should go and get some good counsel. But if you're a layer deeper, or if you are the general counsel, then obviously the law firms do a good job of following those developments with their client memos and alerts. At least with that, you get that really thoughtful analysis and insight into how it can apply to your business in particular, or at least to your industry. And then if you really, I mean, all the lawyers are doing this, but there are AI legislation trackers. Obviously, there's no analysis associated, but they are real time and comprehensive. And then finally, and maybe this is linking back to what Travis just said, is this is sort of a legal issue, but it's also an ethics and sentiment issue. So the best thing that you can probably do is actually stay abreast of how your peers and customers are thinking about this, because ultimately that is what will be baked into any regulations relating to AI. And so we're obviously a good resource for that, just because of the exposure that we have to so many AI companies. But so is any other service provider who is working directly with a lot of AI companies.
Cool. I think we've got one more question. So with AI startups handling significant data, how does Vouch's insurance address concerns related to data breaches and privacy issues? I'm gonna ask Evan, maybe if you could take the first crack at that, and then if Suzanne or Sophie have anything to add.
Yeah, I'd say nature of cyber risks for AI isn't all that different from, let's say, other startups that are out there. I think the main difference, and going back to the chart around frequency and severity, is usually the severity of the claims, often due to larger volume and sensitivity of the data, I would say. This is going to really show up, I think, in your contract requirements. So if you're working with a really large company like Walmart, you may be asked to get like $30 million in cyber insurance. So, and we have a team, as Travis mentioned, we can help serve you with our proprietary products, but also go get that via the markets through our brokerage. So I'd say we're able to go find a solution in some form or fashion. And I would say additionally, we do see pretty egregious requirements for small clients, and so we can really help you with contract negotiations, and really also to help broker if we need to go build those policies, if it's truly a requirement for you. I would say the last thing is that the cyber industry, AI does present some new cyber risks. I was just talking to a friend who was telling me about prompt injection. And so really someone aiming to elicit an unintended response from an LLM. I don't know if folks have seen the video of someone trying to convince an LLM that 2 + 2 = 5, but all that to say is there's true new risks that emerge, and so our cyber coverage is really designed to kind of navigate these new cyber risks. It still kind of falls within the definitions of our cyber risk, even though it's kind of a new evolving AI risk. So, Suzanne, anything to add?
Yeah, I mean, I think the question is a great one, because it's exactly what companies should be thinking about, collecting a lot of data, whether it's AI related or just in their regular business. When the more data you have, the more risk you have. And how the data is collected, having the right permissions. There's so many laws all over right now, all over the world, and throughout the United States, governing proper data use and privacy issues. So layering on top of that, the AI elements of technologies that are being used, does heighten the risks for companies using AI. So it's cyber, I agree, that's a great focus, but then also the coverage that we're offering is specifically designed to specifically address those risks. Just interestingly, because I think we have a couple minutes, I was just taking a look at an FTC consent order that was issued against Rite Aid for using some face scanning in the stores. That the product was designed to address and identify shoplifting risks and customers that may present more risk to the stores. And it was really kind of like a case study for what not to do for a company implementing these kinds of technologies. And the consent order list, it provides a great outline for what companies should be thinking about as they start to implement those programs. So just thought I'd point that out as something to take a look at for those who are trying to get their arms around it.
I would just add
Great
one thing. We have had success as well in helping our clients negotiate down their contract requirements from big vendors, partly because we have so much internal data on helping them to right size their perception of that risk. So first of all, if you do have those, please come and talk to us. But also, if you have any vendors that you're working with that you know do a lot of these programs, and my example that I use all the time because it keeps coming up every day right now is someone like a Walmart putting a $30 million requirement on a seed stage startup for a 30 grand contract, and the insurance will cost a couple hundred grand. So they're the kinds of things where we're seeing a real mismatch right now of basically the price and the perception of risk. And we really want to help you to fix that.
I think that's a great note to end on. Thank you everybody for joining us today. It's rare that we get so much interest in an insurance webinar, and so I think that just speaks to how excited folks are about this new space. And so yeah, thank you for everybody for joining us, for the panelists for your time today. And I'll just end up with like, look, if you want to help kind of make a difference in continuing to pull this space forward, obviously come talk to Sophie, come talk to the team, head to Vouch.us, but also talk to your broker, ask them to ask their carriers, what are they doing about AI risk? Because, not only do we need more and more carriers to come build those $30 million towers on top of our coverage, but, we hope to help lead the conversation and making that happen. So thank you so much. And I hope everybody has a great